Alder Holt Ward, East Dorset.
Right, thank you very much. So before we actually get into the business, we will now do the Doctor Who bit, and the chairman will regenerate as Councillor Johnson.
Well, we don't need to swap seats, do we? Oh, I'll swap seats.
Yeah, but you've got the control buttons.
Have I? Oh, I've never used the control buttons. Does that mean you can electrocute somebody?
Unfortunately, no. But you can turn people off.
Right. Well, can I have any apologies for absence then, please, ladies and gentlemen?
Thank you, Chairman. Apologies have been received from Councillor Bartlett from East Dorset.
I have to say that Councillor Harrison was behind me in the traffic, and he will be here in a few minutes. Unfortunately, we were both stuck in the same traffic queue at the same time. Is that on or off? Declarations of interest. Members are reminded that any disclosable pecuniary interests must be declared, including any issues which may arise through predetermination or bias, it says here. Any declarations of interest? No interest whatsoever. Right, thank you. If I can move to the minutes of the last meeting then, please, ladies.
So proposed, Chairman.
Proposed and seconded. Any matters rising? I noted on something or whatever. We had asked, both of us, for a report to be available on staff absences due to stress. Do we have any update on that?
Chairman, it wouldn't come to this meeting, as this meeting is specifically for the business tonight, but we can take that back to make sure it's on for the next meeting.
Thank you. Am I supposed to turn this off? Right, in which case we move on to item 4 on the agenda, which is the audit findings report by Grant Thornton. Do I have a representative here from Grant Thornton? Oh, I've got Dan. I've got two representatives from Grant Thornton, and I've got Dan. Right, okay. If you'd like to do your spiel.
Thank you very much, Chairman. Good evening, members. To my right, I've got Alex Walling, who's Associate Director from Grant Thornton, and Sam Harding, who's a Senior Manager, and they've been managing the detailed audit work that's been done in looking at the Council's accounts. Chairman, could I perhaps, with your permission, request that we look at items 4 and 5 together? They're the findings reports for Christchurch and for East Dorset. The two reports and the main conclusions are very similar, and the external auditors intend to go through the reports in detail and draw out what differences there are, but just for the sake of reducing repetition, it might just be better to do them together, if you're happy with that.
I'm certainly happy with that, yes, and my conclusion was pretty bit similar, that essentially the two documents were very similar apart from the change of name.
Okay, thank you very much. Well, with that in mind, I'll just briefly introduce the item, Chairman. The reports in the appendices to items 4 and 5 give the detailed findings of the external auditor. The committee is asked to note the content of the reports and to keep the findings in mind for the subsequent 2 agenda items, which is the approval of the 2 sets of accounts. The very high-level headlines for the audit findings are in section 3.2 and 3.4. In that, although the auditor still has to finish quite a small amount of work, which will be done hopefully tomorrow, they anticipate issuing an unqualified audit opinion on the accounts and giving an unqualified value for money opinion. So good news for both councils on both counts. I will hand over to Alex if I can.
Away you go, Alex.
Thank you, Chair. So if I can just take you through the headlines pages of the 2 reports, which, as you say, are broadly very, very similar. And then I'm going to hand over to Sam, who's going to take you through some of the detail of the report. What this report does is bring together the findings from all our audit work for the financial year 17-18. So that's the work around the financial statements, which you've got as a next agenda item, but also gives you the value for money conclusion and also talks about any other work we've actually done. It also brings to your attention any things that we need to bring to you as under the auditing standards, so things like ethics, independence, fees, etc. So in terms of the financial statements, I think Dan's pretty much nailed it already. So we have a small amount of work left to do. We should actually, one of our auditors gone back tonight to just check the accounts all add up, the final set of accounts, and then hopefully we should be there tomorrow. Subject to that, I'm proposing to give an unqualified conclusion on the opinion on the accounts. As part of that audit work, we also look at any other reports that you actually publish, and that's things like your annual governance statement and also the narrative report, which is at the start of the accounts. And we just look at that to see, is that consistent with what we know about the two entities, and also is it consistent throughout all those documents? So, you know, one document doesn't say one thing and something says something slightly different. And I'm pleased to say we didn't find any particular issues in those areas. I think our key messages from the accounts audit really are, despite all the pressures on officers, because obviously there's quite a lot going on within the two councils, the financial statements were produced on time and to a high standard and were supported by good working papers. And I'm sure you'll probably be aware this year is the first year that all the accounts, local government accounts, have to be audited by the 31st of July, and that's 2 months earlier than previous years. So I think the fact that actually they're a good set of accounts actually is all credit to the finance team, so thank you to them. In terms of the value for money arrangements, well, we're required to look at what arrangements do the councils have in place to secure value for money. So we're not saying you're giving value for money, we're saying what are your arrangements to actually secure that for the taxpayer. And there's certain areas that we actually have to look at, and they're all specified in the National Audit Office Code of Practice. So we've undertaken that work. So we don't look at everything, because obviously we'd be here all year and probably for years beyond. We just tend to focus in what we think are the key risks to those particular areas. So it could be things like financial standing, things like that, because they are obviously key issues within the local government sector. I'm pleased to say that based on that work, we're going to give clean opinions, and we're happy to say that you do have arrangements in place to secure value for money. In terms of statutory duties, we have other statutory duties that are open to us as external auditors, but we haven't actually had to exercise any of those, and that's actually good news. That's positive again for the councils. As I say, we should complete the majority of our work, well, the rest of our work tomorrow, so I would hope, fingers crossed, we'll be able to give the opinion tomorrow and then close down the audit. So thank you again to the finance team. I'm going to hand over to Sam, who's going to talk through some of the detail.
Thank you, Alex. Thank you, Chair. I'm not going to go through sort of line by line for the rest of the reports, you'll be pleased to hear, but I just thought I'd draw out some of the sort of key issues. So I'd like to sort of draw your attention to page 5, if I may, which is around going concern. And some of you may note that we've sort of gone a bit into a lot more detail than we have done in the past on going concern. And that's sort of reflective of changes to auditing standards that came in this year. Really, as a result of the financial crisis. So it places more of a responsibility on auditors to actually comment on going concern. And our audit report now actually has a paragraph specifically in respect of going concern. Now, in the public sector context, going concern isn't really so much focused on the actual organisation, it's more on the delivery of services. So although the intention is that Christchurch and East Dorset will demise on the 31st of March, although their services will continue, so therefore that's not a going concern issue. Although we have included an emphasis of matter paragraph within our audit opinion, just drawing attention to that.
Through you, Chairman.
Councillor Jones.
Could I just ask, we do have a lot of page numbers. We're talking about where it says page 5 in the bottom right hand corner, aren't we? As opposed to page 9 at the bottom.
Yeah, it's our page 9, yes, which is their page 5.
Better keep hold of that one then. Yeah, sorry about that. I didn't print off every page. Yeah. You're page 9. So just to say really that we have also included an emphasis of matter in our opinion. So the opinion is not qualified, it's unmodified, but it's one of those areas where we think that it's quite important and we would like to draw the attention of any reader of the opinion to that matter. So pages 10, 11 and 12 pick up on some of build on the audit plan that we issued to you earlier in the year. So those are the significant audit risks that we identified, either ones that we need to under auditing standards such as a revenue recognition and management override of controls, but also ones specific to the councils and this particular type of council. So we looked at property, plant and equipment valuations. And it is important, it is a requirement that the value of the asset shown on the balance sheet is not materially different from the current value. So we have done work challenging the valuations that are included, and we have made a recommendation around the timing of those valuations. The council undertakes the valuations of the assets in the year on the 1st of April. But that obviously increases the risk that there is a movement during the year. So we have made a recommendation around looking at whether any of those asset valuations can be carried out at the 31st of March. And I know that management will be looking at that, particularly moving into the new context going forward. We also looked at accounting policies set out on page 14, and we're happy to note that there were no issues arising from those. Alex has taken you through page 15 around the other communication requirements, and page 16 the other responsibilities under the code.
I do like these green traffic lights on the right hand side. They're very reassuring. Yes.
That's good.
And also I've highlighted various things myself, which saying no issues were identified. Our audit work has not identified any evidence of, and so on. Our audit work has not identified any issues in respect of. It's all good stuff.
It's all good stuff. I think it's all credit to the finance team. Know what
Yes.
they're doing, and yes, so
Indeed.
no issues at all.
Checks in the post.
So page 17, 18 and 19 talk about the value for money, which Alex picked upon. The risk that we identified for both East Dorset and Christchurch really was around local government reorganisation and partnership working. Really looking at the extra work that the officers have to undertake in order to do the work streams involved in LGR, as well as trying to manage the ongoing day-to-day business of the council. So the work that we've done to look at that, and we're happy that the overall work of the council has not suffered as a result of the work for LGR, and that there are appropriate arrangements in place in order to build on LGR processes moving forward. So as Alex said, we have given you an unqualified conclusion. Page 21 is just the action plan, so that just sets out a bit more detail around the valuation issue. And moving on to 22. So 22 identifies the things that we've picked up through our audit and have asked management to change. They have adjusted everything that we have asked them to. So for both East Dorset and Christchurch, Note 8 related parties has been amended slightly. It's taken out it's only now including the council's share of the SVPP figures rather than the whole of all the partners' share, so that reflects how Dorset Waste Partnership is treated and is probably a more appropriate method. And we also asked the council to include another note in their accounting policy, note 7. That is just building on the information that's already in the narrative note just around LGR, but it actually puts it into the financial statements as opposed to having it in the narrative report, which doesn't form part of the financial statements. So management have agreed and have amended those. So as I said, those were the adjustments that we found for Christchurch. The findings for East Dorset were very similar. Check I got the right one. Except for East Dorset, we did identify one change in the actual figures, but all it is a classification on the balance sheet between two headings, so it had no impact on the bottom line. And the two amended disclosure changes were the same. And I think that's all I have to say, unless anyone's got any questions.
Thank you very much. Any members, any questions? Councillor Jones.
Thank you, Chairman. In putting this forward, I feel the same apprehension of a club batsman going out to face Michael Holding's bowling, but I have to ask it. On your page 12, on page 23, you have audit fees. Now you've got proposed fee 42,228, fine. Grant certification 5625, total audit fees 47 whatever.
No, the final is 5,000 shorter.
Exactly.
Yeah, I think that's the grant certification, which is the housing benefit. We don't actually undertake that work until later on in the year, and there is a possibility that if we find a lot of errors and have to do a lot more work, then that fee might increase, which is why it's in the TBC at the moment.
Through you, Chairman, in that case, surely the final, it looks very like to me that the final fee is going to be at least 47,853, and it's not going to be, it should be either to be confirmed, or it should have a greater or equals than 42,228, because it does seem possibly, and as I said, I'm very, very tentative because I'm a historian and not an accountant and putting this forward, but it does seem a discrepancy.
Yeah, I must admit, I looked at it and I thought you'd come in under budget, which I thought was good. But no, you're only under budget because you haven't done some of the work.
Yeah. Yes. No, I think that's a fair comment about it. Perhaps I would hate to use the word misleading, but I think it's just slightly confusing, isn't it? Because you're absolutely right. It will be at least what the proposed fee is. But obviously, as Sam said, if we have to do some additional work for housing benefit because there are errors, and hopefully we won't have to, and certainly historically we've not had to, it will come in on budget.
Mind you, I suppose I could go along to the council solicitor and say, look, they said final fee, so can we hold them to that, please? But that might not be terribly appreciated. I have another question for me, or
Councillor Dedman was next.
It's just, you might detect a slight end of term atmosphere about the place tonight. On your page 9, or page 13, I'm sorry, beg pardon, apologies, where am I? It's the wrong bit of highlighting. You're talking about the what's going to happen, unless we win next Monday, in which case we're into a whole new ball game. On page 19, the council shares a management team and finance function with East Dorset District Council, which will transfer to the new authority, bringing additional pressure on staff. Now, again, I might be being pernickety, but the management team in its entirety is not going to transfer, because the whole point of this reorganisation, although no unitary reorganisation has ever made the savings that it claimed at the outset, but the way that they're going to achieve it is by cutting staff, and you're going to say that the staff are going to the management team and finance function will transfer to the new authority. But this isn't going to happen, because posts will be declared redundant, people will go forth into the outer darkness, which leads me back to your comment on page 9. We identified completeness of payroll and expenses. Again, this is getting, I see Mr. Milner waving desperately.
Yes, yeah. In Milner, please.
Thank you, Chairman. Good evening, members. Just in response to the transfer of staff that go through a recruitment process prior to the end of March, there is a potential expectation that those staff will need to transfer to a new authority. It may only be for a day, but they will continue to be employed by the existing councils between now and the end of March. There is a slight difference in approach in terms of the chief exec's appointments in Dorset area and Bournemouth, but I think they're going to align and that potentially, and the same with the tier 2, it potentially means that those that aren't necessarily appointed to roles will still obviously carry on in their existing roles for their existing councils, and possibly will transfer and then be made redundant within, you know, a period. But that's still to be determined. So people will transfer, but it might not be in the long term.
Thank you.
Just to follow up on that, is there not a risk though that rather than sit around waiting for the axe to fall, somebody may look for another post, and then you'll find that your problem is going to be fulfilling the post of head of history, say, for 6 months, and nobody who's got any good is going to apply for it for 6 months. So is there not a risk in there that the process will lead highly skilled and qualified staff to seek further employment, and then we are going to be left with a gap that is going to be difficult to cover?
Through you, Chairman, potentially, you know, clearly the expectation is that the chief exec roles and the tier 2 roles, so the directors, will be advertised, will be filled possibly by October, and those officers that are unsuccessful will clearly make a decision as to whether they stay or go. You know, some may stay with their existing authorities till the end of March and then potentially go when the new authority arrives. Some may seek pastures new between then and the end of March. So yes, there could be a risk.
I think the point is that it's there in the report in the significant risk column. You know, there is a significant risk of, you know, the pressure on staff and so on. So I think that's understood. Councillor Dedman, please.
With respect, Chairman, I was going to come to that point, and I don't think it is particularly well understood. I think it's been obvious from the start that there will be problems, and I'm not saying that because I want there to be problems, but because I've been involved in mergers in various other formats, and I know that there are always problems, even if you don't foresee them. I'm not saying anything like Councillor Jones is, that people will leave or whatever, but there are always problems. I note in one of the paragraphs you talk about even something like harmonisation of council tax, which of course I suppose we have to deal with ongoing, so that it's ready for if and when we merge. But all I wanted to say, Chairman, was really that I do think it ought to be kept a very stringent eye on, and I wasn't particularly sure that it had been totally taken into account on this, despite it's I mean, as you say, it's accepted, we know it's happening, but I think that I would be happier to know that we are taking it extremely seriously. Oh, the other thing, Chairman, this is just a point of comment. I think you've all done jolly well with this short run-in to the account, so well done.
Thank you. I don't know whether Grant Thornton representatives here have got any comment on what's been said about the staff risks and so on. I mean, it's your report.
Obviously, as part of the work that we've done, we've focused on the financial year 17-18, because obviously that's the year that we're actually auditing and looking at. So, and we've just flagged that potentially that there are risks going forward. I mean, to be honest, you're finding it at most local authorities, because they're all facing austerity and they're all looking to cut posts, and, you know, people are worried about their jobs. You know, staff morale and the work that they do is increasing, and it is an area of, you know, that you're quite right that clearly councils need to keep an eye on going forward.
Right. Anybody else? Oh yes, Fred. Sorry, Councillor Neil.
Okay, it doesn't matter. That's fine. Through you, Mr. Chairman, I attended the briefing last night of the shadow executive meeting that was held to say what they're going to be doing. And last night they were quite categorical in the way that it was very pro, obviously, BCP, but they were very categorical about it could take up to 2 years before anyone well, not everyone, because they said there will be a natural wastage as it goes through that 2-year programme, but generally most things will be the same on day one, straight after, for a considerable while. They're talking up to 2 years.
So similarly, I attended a meeting of the Dorset councils on Monday, I think it was, where it was being discussed. Yes, and they're obviously, you know, come April the 1st next year, you know, it doesn't make any sense to have 6 department heads, you know, 6 heads of planning, or 5 heads of planning rather, and so there will have to be some rationalisation then after the event. Councillor Jones again.
Thank you, Chairman. Just a small point. I have been saying for some time that the savings might prove to be illusory, and I think that's the first indication the illusion might come in, or might be shattered a little earlier than certainly the leader of the council, not a million miles to our west, might believe.
Can I welcome Councillor Harrison to the committee, and say that we're just on to basically items 4 and 5, and I think we've just about got to the end of that, unless there's anything else you need to say, Dan?
No, not for me. Thank you, Chairman.
Okay, now what we have to do basically is just to note these reports. I'd like to convey the thanks of this committee and the councils or whatever to the audit team, and also to Grant Thornton for the work that have been put in on those. And do I need a motion to note these things? I don't think so.
Chairman, I'll propose it.
Nikki?
Just going to ask Dan, do you want a formal vote on this as it's the annual findings?
Yes, please. I think that would be in order.
Okay, could I have a proposal then to note these these 2 reports on the 2 councils from the auditors? Proposed by Councillor Jones and seconded by Councillor Neal. Emphasise the thanks to all and sundry. I'd like to welcome Councillor Shortell to the room, who's also presumably been caught up in the same traffic jam that delayed myself and Councillor Harrison. Councillor Shortell.
Thank you, Chairman. I'm just taking 2 hours to get here from Dorchester. I made the mistake of coming through Parley Cross, and
It'll all be sorted out by that nice Mr. Beasley.
Right, I've got a proposal from Councillor Jones and a seconded from Councillor Neal. All those in favour, please indicate. Thank you very much. That's right. Now we move on to the statement of accounts. Once again, very similar. It's you again, is it, Dan?
It is, Chairman. Thank you.
Off you go.
Thank you. I was going to ask permission again if we could perhaps discuss 6 and 7 together, because I can run through both sets of accounts and just draw out a couple of the differences, if that's okay with you, Chairman.
That's okay with me. Is that okay with all members here? Yeah. I don't think we need a proposal and a seconder or anything for it. We'll just do it.
Okay, thank you. So the year-end accounts for the 2017-18 financial year, they're both quite weighty documents, over 100 pages each. The reason for that is they have to be prepared in accordance with what's called proper accounting practice, as set by Treasury and SIPFA, and prescribed by the Local Authority Code of Practice and also International Financial Reporting Standards. While they're very good in that they mean the accounts of organisations are comparable, so the accounts of the council are comparable to a FTSE 100 organisation, and if you're a private individual wanting to invest in the organisation, the figures are prepared on the same way. Of course, local authorities are quite different beasts to companies, and one of the reasons why the accounts are so long and complex is all the things we have to put in for the accounting practice we have to reverse out somewhere else to get back to the actual council tax position position for the council. So the income and expenditure account has to be prepared with various items in it which do not hit a local authority's expenses. The main ones being things like depreciation, not an expense to councils, it is to businesses, certain pension fund adjustments we have to put in, and expenditure that is funded from reserves. So there's a raft of things we have to put in the I&E account that actually aren't then reported to members as outturn. Perhaps I could ask members to turn to the income and expenditure accounts. For Christchurch, that's on your page 77, and for East Dorset, that's on your page 194. So the figures on the right relate to the financial year that's just been audited, and you'll see on the bottom right of both of them pages, each council made a deficit on the provision of services for the financial year. A pretty similar deficit. Christchurch had £756,000 and East Dorset £775,000. Now, that's quite different to the actual outturn, because when we went to Resources Committee in May for Christchurch, the actual position is a surplus of £386,000. And for East Dorset Cabinet in June, we had a surplus of £532,000. So you can see the effects of things like depreciation and expenditure funded from reserves has the same impact on both councils. It basically turns the surplus position, as reported to members, into a deficit. Okay, so the I&E account is probably of limited value in actually assessing what the council actually achieved in the year. What is of more use is the balance sheet. The balance sheet is on page 80 for Christchurch, and it's on page 197 for East Dorset. So the balance sheet is useful. It shows what the council owns and owes. Its net assets at the end of the year, and again the bottom right for Christchurch, you'll see Christchurch Council had a net worth of 59 million. 59 million at the end of the year, compared to East Dorset's 15 million. The reason for the difference is mainly in the asset base. Christchurch Borough Council has got assets, fixed assets, buildings and land of 74 million, which you'll see towards the top right hand of the balance sheet, compared to East Dorset's 32.7 million. Now, a lot of that difference is actually accounted for with a single asset, and that's Highcliffe Castle. So Highcliffe Castle's got a value of over 21 million and accounts for a lot of that difference between Christchurch and East Dorset, which then ticks down to the difference in the net worth. Okay. The other thing that I'll point out on the balance sheet that people look at company accounts is liquidity. So solvency, can the organisation afford to pay its bills in the short term? What you'll see for Christchurch is that there are current assets of 17.5 million halfway down the page, compared to current liabilities of 5.3 million. That gives what we call a liquidity ratio of 3.28. Anything above 1 is good. So the council has basically got 3 times more funds at its disposal than bills it's got to pay. So it's a liquid organisation, which is a good thing. Okay. Similar story for East Dorset. Total current assets of 21 million and total current liabilities of 6 million. So that gives you a current ratio of 3.34. So the two councils are very similar, which is what you would probably expect, having the joint officer and core that it's got. So they're both very liquid. A bit further down on the balance sheets, you will see the pension liability. So this does temper the net worth of each council. 27.4 million pension liability for Christchurch, 32.2 liability for East Dorset. They are the accounting positions. We have to put these figures in with accounting conventions. The actual funded position of the pension fund is more like about 90% when I last looked in the end of 2017, and that was an improvement from the actual last formal valuation at 83% in 2016. So it's moved in the right direction. You can see the pension liability for Christchurch has gone down from last year from 28.4 to 27.4 million, And likewise for East Dorset, it's gone down from 34.8 to 32.2. So the deficit is moving in the right direction, but please just be aware that is an accounting deficit and not the real world deficit. The last bit on the balance sheet is the last section, the reserve section. You'll see both councils have got at their disposal significant usable reserves. So in total, Christchurch has got 11.7 million, which is a similar amount to what it closed down the previous year, and East Dorset has got 14.9 million, which is about an increase of 1.5 million from the previous financial year. The only other part that I will just draw members' attention to is if in the accounts you want to see our actual financial position for the year, you'll see that in the narrative report. So page 68 for Christchurch and page 184 for East Dorset, you'll see the outturns as reported to resources of £386,000 surplus, and Cabinet £532,000 surplus. That note does actually reconcile it all back to the income and expenditure account that we've just been through via a couple of other notes in the accounts, which I won't go through. But you can see that that's really what holds it together to what the financial position was. I'll leave it there, Chairman, as a talk through the accounts, but obviously answer any questions.
Thank you, Dan. Interestingly, you happened on page 184, because on page 184 and on page 67 on the Christchurch ones, there is a statement which I regard as being grammatically incorrect, which it says the Capital and Revenue Outturn Report 2017-18 reported to members a year-end surplus of 532,000, which differs to the position reported in the financial statements. You don't differ to something, you differ from something. So that should be amended.
Indeed, thank you.
Any other comment from members? Councillor Dedman.
Yes. Sorry, thank you, Chairman. It's mentioned in here about the joint assets, and this is looking forward. I know this is the accounts as was, but what do we do once we don't have the joint assets? How are they valued? I mean, I assume we're talking about things like trucks and stuff like that, not... does that come out in this document, Dan? Because I wasn't very clear about it.
Yeah, so I don't think this specifically refers to the joint assets. The joint assets that the partnership has are mainly a few vehicles. There aren't very many, things like the Nissan Leafs that we have outside and things like that. All of the land and buildings are owned by one or other of the sovereign councils and will go, should LGR go ahead, will go with the sovereign council. There will be a little bit of work to do, which is underway, just to have a look at what proper joint assets we have, as well as vehicles. That's likely to cover things like IT licenses and whatever if we're sharing a system, and we'll come up with a method of either disaggregating them, you take that, we'll take that, or coming up with a cost share apportionment where perhaps one council buys out the other. But that's work in progress. If I'm honest, if you look at the value of assets in the balance sheet, it is marginal.
I have a query of my own. I was just sort of puzzled on page 109 and 110 in the Christchurch accounts. It may also exist in the 108 and 109. It may also exist in the East Dorset account. There is reference to new burdens in several places. Is this some company or some government scheme or something that I haven't heard of? The new burdens, benefit cap, new burdens, welfare reports, new burdens, self-build, new burdens, property search, new burdens, business rate revaluation, and new burdens, employment support allowance. What is this new burdens?
Thank you, Chairman. That's basically where the government asks us to do something that we didn't do before, and they give us a bit of funding towards it. So it is literally a new burden. It's something, for preventing homelessness, assessing universal credit, the custom build is for when people want to custom build their own houses. So these are all either national schemes that the government comes up with for a variety of reasons that local government has to get involved with or has to assess or control, and we tend to get a grant, not always of very much value, but we do tend to get a grant to compensate us for that extra work.
I see. I've now found an East Dorset one on page 224. Yes, and I see last year we had a grant from central government of £5,000 presumably, and this year we haven't got any. That was on property searches, so that's that it sort of explains that, but it wasn't a terminology that I was familiar with. Anything else from members? We do. Councillor Mrs. Jones.
Just a very minor point on page 111, where it's talking about payments. Red House Museum Joint Management Committee 50, just for absolute transparency, it's councillors P. Hall and D.C. Jones, not Councillor Mrs. Darren Wilkes.
Through you, Chairman, there is a problem in that Councillor Hall and myself sit on the Red House Management Committee as representatives of the Dorset County Council. Christchurch Borough's representatives at the moment are Councillor Mrs. Jones and Councillor Geary. So something somewhere, and Councillor Mrs. Wilkes is not a member of the committee. So something somewhere.
Yeah, there seems to be a factual error there. Could that be resolved, please?
Yes, it can. Before they're published, I will liaise with committee services to make sure that is spot on.
Are we not supposed to have signed these by the 31st?
Well, yes, we're hoping that the opinion will be issued tomorrow by the auditors, and we're asking members to approve the accounts tonight, but they can be approved with the knowledge that that would be amended.
Oh, so you don't need me to sign on a piece of paper tonight?
Yes, on a couple of items we do, Chairman, and the Vice Chairman as well, please, which is the letter of representation and the statement of responsibilities. But these accounts will not be published. This will be corrected by tomorrow.
Thank you. So, is there anything else that you've found that needs correcting, anybody?
Can I ask one further point through you, Chairman? We're looking at the page 112. While it's a very minor point for Christchurch, it may be a more complex one for East Dorset. The council has relationships with a precepting authority, Dorset County Council precepting authority. Where do the parish councils who precept come in? Because both Burton and Herne levy precepts.
They do, but they're not major precepting authorities. We account for their precepts that they demand on us in the income and expenditure account, but in terms of a related party transaction, they're not deemed an organisation that could influence the management of the council.
Thank you.
Yeah, I did note them somewhere. Yes, because you've only got the two councils in Christchurch, the two parish councils. The total precept is 21,000 or something like that. 26,000 was it? Whereas in East Dorset we've got 73 parish councils, something like that. So it's a lot more. So we need to approve these. The statement of accounts must be approved by members of the Joint Audit Committee by 31st of July in order to comply with the accounts and audit regulations. So we need a motion to approve, please. Sorry, I'm not. Oh, I see what you mean.
Through you, Chairman, can I propose that pending adjustment of the points that we have raised, that we sign these documents?
Yes, you can certainly propose it. Can I, although Councillor Neil is possibly correct in terms of the fact that if you and I are to sign it, then it might be better if somebody else proposed it.
I'm happy to propose.
Gina, Councillor Logan.
Yes, I will propose them. Yes, obviously with the amendment.
Can I have a seconder then, please? Councillor Neil, thank you. Sorry, one from each, it makes a bit of sense. All those in favour? You can heave a huge sigh of relief. I think that concludes the business of the meeting. Unless anybody else wants to stick a spanner in the works, we can all go home and join the traffic queue again. Councillor Harrison.
Yeah, it was just to record a vote of thanks in the offices for putting it all together. It's a really detailed document.
Right, yes, thank you very much. Yes, we'd like to record the vote of thanks. I mean, we'd already sort of done that with the previous work, but I suppose it is a separate batch of work. So, you know, all good stuff. You know, it's all nice to see everything lining up, and the fact that we've only got three minor amendments there, one of which is a point of grammar and the other one's a factual error, is good. Thank you. Thank you very much.